Hi, welcome back to the channel. ARK Invest has been in the news ever since Cathie Wood set what then seemed like a ridiculous price target for Tesla. Year to date, ARK Signature ETF, ARKK, is up some ridiculous amount like 80 to 90% or something. I think even more with the recent rally that we had in the Nasdaq. And it's absolutely crushing the S&P 500 index. ARK Invest's underlying ideology, as stated by them, is investing in disruptive innovation. In line with this theme, they have a few ETFs listed, such as the ARK Innovation ETF, the Autonomous Technology and Robotics ETF, the Next Generation Internet ETF, Genomic Revolution ETF, and the FinTech Innovation ETF. Now, I'm definitely a supporter of the companies within these ETFs, and I genuinely hope that they're able to achieve what they strive for, since that would improve the quality of life for the human population as a whole. But I would argue that based on current valuations, they aren't really the best investments. The approach ARK Invest uses is the exact opposite of what I personally use when investing in my portfolio. As of making this video, I have no technology stocks in my own portfolio. There are a couple of reasons for that. I'm extremely cheap, so immediately that cuts out the universe of whatever the hot stocks are to invest in at a time when people are willing to pay absolutely any sort of amount for future earnings and possible growth. I'm a big believer in investing where I see value. The ARK analysts see value in technology and believe that the companies that they're invested in will outperform the market. How that plays out is something that time will tell. With my investing, I'm not hoping or praying for any potential outcomes. The companies I'm invested in were bought with a margin of safety, so I can reasonably estimate the performance of my portfolio and what it'll be like in the next, say, few years. There's a lot more peace of mind with not having to worry about what stocks to buy based on events, like the presidential election, for example. Also, we haven't really even seen what the ARK ETF is like in bear markets. Ever since its inception in 2016, markets have pretty much just gone up. The closest glimpse we've gotten into what a correction would look like for the ARK ETF was back in March, where the ETF fell a little bit more than the market, but of course it recovered soon after and largely outperformed, because there was a lot more money invested in technology stocks. Anyone who bought into it back then is up 150%. But what if there was no stimulus or quantitative easing? Would the markets have bounced back like they did? How would the ETF fare in a credit crisis type of situation with a bear market where the liquidity is not easily available to fund the kind of risky innovation that the companies where ARK invests? Another point of difference that would make me stay away from ARK ETFs is the diversification. In my opinion, they are far too diversified. My portfolio has just 4 stocks, so that should give you an idea about my views towards diversification. If you look at the top holdings of the ARK ETF, the top 10 holdings make up around 52% of the total ETF. In total, they have around 49 positions in the Signature ETF. Now, this is far more concentrated than most ETFs out there, but it's still diversified to the point of diluting performance, in my opinion. They may be so diversified due to regulatory requirements pertaining to capital management in ETFs, but it's impossible to have the same level of conviction in the 25th position as much as you have in the 5th position. For me, having a portfolio with more than 7 to 10 holdings is being overly diversified. I want to include a short clip by Charlie Munger talking about diversification. When a almost 100-year-old billionaire talks, it's probably a good idea to listen to what he has to say.
Where would you invest your grandchildren's money?
The very word diversification, which is taught in every business school, is the holy golden grail. I consider almost asinine. I'm only interested in investing where I have some sort of advantage. And of course, that means I can't do the conventional things. And if I have the advantage in 3 different things, that's enough for any family. 3 wonderful things with the odds in your favor. I mean, do you want egg in your beer in life? And so I think the idea you have to have a big diversified portfolio, that's fine for the ignorant people to be fully diversified. But if you actually know what you're doing, I think 3 investments are plenty. And the Mungers, if you take Berkshire and Costco and Lilu's Asian fund, that's 90% of the money.
The idea of investing in businesses in your circle of competence, not being diversified, all makes sense if your goal is to do well when investing. Just because their methodology has worked is no guarantee that it'll continue to do well in the future. In the long term, earnings of a business drive stock prices. But the key point that's relevant to the success of an investment is the price that the investor is willing to pay for future earnings. And at least for me, the price of buying companies promising disruptive innovation is far too high at the moment. I love Charlie Munger's saying, you don't make money in the buying or in the selling, but in the waiting. In my opinion, ARK Invest is invested in a far too diversified manner in fields I frankly don't understand, charging fees that in my opinion are not justified. If the incentive structure was based on performance, that would make a lot more sense. Now, I'm not trying to discourage anyone from investing in these ETFs. I'm just explaining why I wouldn't be invested in them personally. Who knows, maybe ARK ETFs will forever outperform the market as they have. I certainly hope they do, and that the investors achieve absolutely excellent results over the long term. Let me know if you've personally invested in ARK ETFs. Do share your reasons for doing so. I'd really be interested in hearing your perspective and opinion. Hope you like this video, and thank you for watching.